everybody, and welcome to the Tradition Mortgage Podcast. I'm your host, Mike Greenlay, along with Erik Hendrikson, my co-host, and today's special guest is Dean Nelson, president of Homes by Tradition. And gentlemen, thank you for joining me here. The home building market is fast and furious, but that brings a lot of advantages. It brings a lot of challenges. And Erik, just real briefly here. Obviously, with the mortgage market being where it's at, there's obviously a huge demand, and so on your side, you want to do as much business as possible, but obviously there's as far as new home sales, there's got to be challenges there too, because do you notice that there's just not the kind of inventory that supports maybe the demand that you guys are seeing?
Well, thanks, Mike. There are challenges on the new construction side as well, too, and we talked about it in a previous podcast when we had Adam Mickelson from Tradition Development. It's just, there's a long lag period to bring, fresh lots to the market that you can construct a home on. So, with the pandemic, everybody kind of froze up a little bit and trying to play catch up, and you're coming off of a decade of underproduction of lots after the last recession. So, certainly, that does create challenges, but however, there are lots available out there. It's just the demand is high, so the prices are continuing to go up as well too. But again, I think after the pandemic, people are really rethinking their living space, and there's just only so much you can do with existing homes to get them the way you want them, and it's there's not a big supply of existing homes, so people, again, look back to new construction to say, hey, we're going to build the house that we really want, and it's going to have, the amenities in it that people want now, and that's a good lead in to talking with Dean. Maybe you can just share with our audience just what you're facing when people call you. What is their interest level? What's driving this interest? What are you seeing? If you could maybe just share kind of maybe some highlights of the conversations you have with your clients.
Sure. Well, thank you, Mike and Erik. What we've seen over the last year, and actually beyond that, is you hit it on the head with existing homes. There's a big shortfall, and so customers are out there searching for properties, and then balancing the choice of, do they build new or do they remodel existing homes? Well, being that there's a shortfall, they can't find what they want. And if they do find what they want, when they invest in something like that, the remodeling cost to get a home to what they need is very, very high. So the option of building new is a better option, I think, for them. So when I meet with them, it's at the point where they're looking for properties. I get involved with that and the design side of things, and they start to see the benefit of designing a home that's specific to their needs, and that's where we move forward.
I'm sorry, I know we've had this conversation before, Dean. It has to do with people are customizing their homes, and you've seen a kind of an uptick in things that you hadn't seen in the past in terms of designing the home and things that they want in their home. Can you quickly outline a few of those things? I know there's obviously with things like home offices and whatnot. What are some of the, I guess, things that people are focusing on a little bit more these days?
Well, you hit it on the head there. Home officing is, because of COVID, I think a lot more people are finding that their performance and their employers find that they're more productive at home, and so they're during COVID stayed at home, and now they're building offices and creating these exercise spaces and these other spaces to help them be more productive in their home, and that's been a big movement.
Commute's pretty good though.
Yeah, it's good. It's kind of interesting. You mentioned that. I just had this conversation with one of my senior loan originators last night, as a matter of fact, and we were in the office, and he was sprinting out the door, and he has some young kids, and they're involved in activities, and he was kind of basically saying, "This is why I love my home office," as he was running out, because he had to get 20 minutes back to his home on the west side of town from our Edina office, and he just stated that he really loves the ability to work from home, and then just can grab his kids and do his thing, And again, I've seen the pictures of your beautiful homes, Dean, and just these home offices that people have, and they have everything that you would have in a regular office, and certainly with all the high-speed internet and other things. It's pretty amazing what you can create for people in their homes, which, quite frankly, in an office environment, you don't have the ability even to build anything nearly as big or as nice, so that's almost, it's cheaper real estate space to do it in the residential home, and certainly for an employer. If I don't have to pay that cost to them, or I don't have to pay that cost in rent, I'd rather pay it to them in salary, and it's a win-win.
Right. Well, I think too, when it comes to officing, 2 years ago we were looking at TVs in the house, audio, video, overall network, theater systems. Now we're looking at how we equip the office space with green rooms, backgrounds. What is the type of conferencing that they're doing? Is it Zoom? Is it just so many different technology features that we're looking at right now and studying that we didn't in the past.
So, and one of the things, and this seems to come up regardless of who you talk to, in whether it's land development, home building, mortgage, or anything, it's the old story of supply and demand. I mean, it's the old story of is there enough to support what we're trying to do, and so as a home builder, give us a little bit of a breakdown of what you've seen in the market here in the last few months, and then what you expect going forward in terms of the whole supply and demand curve.
Well, that's a tough question, Mike. Holy smacks. Yeah, everybody's heard about it. That's the biggest challenge we face right now is the unknown, and having those discussions up front with customers when we're talking about budget and complexity of a house size and so on. You really have to be honest with them and start being a little more transparent on what those lumber prices mean, what the charts are, staying ahead of it, so they have an idea moving forward what that price impact is. And it's not only just lumber. We're seeing some cost increases, and we're negotiating on the labor and supply side. Yeah. There's a huge demand, and the supply side is short, and that's what we're hearing across the board. So we're talking with the principals on lumber side, and where they're getting their supply chain issues as well, and coming up with strategies with customers on potential locks when it comes to buying materials. There's only a point where you can get a lock on material, and then it goes up or down from there, and the lumber companies are faced with the same challenge. And so I think what builders in general are going to do, including Homes by Tradition, is have that discussion with clients, discuss what those impacts are, and a partnership on that impact. If the price goes up 5%, what does that mean to the builder? What does that mean to the customer?
So, and that's actually quite an interesting thing, because now they're not. Now it changes the builder client relationship to a little bit more of partnership, where you're saying, for sure, hey guys, we want to help you. We want to do what's right by you and by us. So now you have to partner with us on whatever that wiggle room is. That's actually quite interesting.
Yeah, it's very, very true. And just for instance, yesterday I met with a customer, business owner. I'm fortunate that I'm working with executives, and these people understand it. They're in the market. They see it. They read it. And so they're pointing me on the conversation. They're asking me these questions. And it allows me then the opportunity to respond and be honest just where we're at and what kind of challenges we're facing and how we together get through that.
Interesting.
Yeah, it is a different world, right? I mean, this transparent relationship. In prior years, you kind of have what they call the closed book deal. You just give them a bid, and here's the price, and they're going out and they're kind of trying to shop you and knock that down. And now they're really underneath the hood, and you see all these components, and it's like when you're picking a custom builder, every builder is dealing with the same material, issues and other things. So you're kind of educating them, and it does make it more of a collaborating type of situation, saying, hey, if you want to get this done, we got to make decisions fast so you can lock in on prices, and let's value engineer here. If you don't want to pay the price, well, you got options here. We can either swap out different materials, or we can scale this property down, and maybe we can, versus 2 rooms, you can make it into one kind of hybrid room or other things like that. So, but it does seem like it is more of a collaboration, and if people do want to build, it's kind of like you can't tiptoe around the edges here. You you got to jump in and you got to be willing to commit and make decisions quickly and execute. And certainly for you as well. And kind of leads me into my next question is managing this workload where you have a lot of interested parties, right? And it does put you in a little bit of a better position where you can kind of pick and choose who you want to work with. If somebody wants to try to beat you up and be non-committal, you can kind of say, you know what, call me back when you're ready to do business, and you can move on. But with the shortage of the trades and other things, I mean, how do you find that you've been able to manage this past year and this heavier workload and do it effectively, and obviously with the goal of creating a positive and seamless client experience? And it's, coming from the mortgage side where we had overwhelming volume, it's kind of a difficult task at times because you want to say yes to people and you want to, take in that business, but you understand that you got to create the experiences that's going to make a satisfied customer to get future business.
You are exactly right, Eric. And we faced that exact same situation where it's just been amazing over the last year where customers haven't backed out with the price increases. So you're having these discussions and they lead you into time frames and durations and what I would call, basically built-in even flow, where we're working with customers to try to slot them into the architectural design stage and the bidding stage and so on. And some of the customers that we have not had, fortunately, anybody back out. But they have asked about, Dean, should we wait and see where the pricing is in 3 months or 6 months or 9 months? And the unknown, who knows, it could be higher then, So I tell people we got to just dig in, we got to design together. And when it comes to the timing and management of our resources, that helps me kind of line things up to where we can manage it internally. My team can manage it. My trades and suppliers can manage as well. My team, one of the biggest challenges they have for sure is the supply side. How far in advance should we be ordering appliances? How far in advance are we ordering interior doors? And just really finding out from our suppliers and trades what lead times are on these individual products so we don't get into the construction cycle and have a huge delay or a time stop within the construction of the home.
I want to ask you something about that because you build higher end homes and they're custom homes. How is it dealing with that? Because if I was a builder that had X amount of models, I know what I'm going to pretty much put into those homes. And yes, you guys all have to have lumber, concrete, all that kind of stuff. So you share the challenge of that. But because you have custom homes, you can't bulk order something ahead of time. You can't have a warehouse of stuff that you don't know that you're going to use yet. Is that provided a different challenge because you are custom builders?
Oh, absolutely. Danielle Matthews, our designer, and our Mac and Charlie, our construction managers, they're working right now with our customers on, setting up selection appointments in advance. We've had to rotate and push what used to be a pretty standard cycle of selection process now has become a strategy on what we put our customer in front of and when we do that. Yeah. We sometimes start the selection process and have our customers shopping before we go to contract. Honestly, they're visiting these showrooms and they're visiting appliances and they're meeting with our cabinet designer, and they're putting these things in order so we can get on their schedule in advance.
Yeah, I mean, it's just a whole another level of execution you have to build. And I want to talk to you a little bit about the financing side of this with these custom homes. But before we get into that, I got to ask a question. Everybody's talking about it. They've talked about, the cost has tripled. For the layman, you're talking to a mortgage banker here and, our marketing director, treat us like third graders here. Give us the 2 minutes on what the heck is going on with lumber. Why is it so expensive, and is it going to continue to be the case? What do you see as the factors there?
That's very, very interesting. I've had several conversations with the principal people of our lumber suppliers, and I asked them, is it a COVID situation? Is it a supply chain side where they shut down lines? Well, there's some of that for sure, and that's trickled into the problem that we have today. But the consumer confidence, the interest rates, the demand on a national basis. I have found out that specific to lumber and trusses and wood components, it's the homes sold far exceed the supply side right now, and so the inventory is short. It's just simply economics 101, supply and demand, and I've heard that from several people now. So I can't put I mean, I know the percentages, like year over year, 102% on 2x4 studs and things like that. Plywood, you guys have heard the numbers, but right now it's really just an impact of so many homes sold, and the supply side just simply can't catch up. And what I'm hearing is it's going to be a 6 month, 9 month to where it levels out, but up to 18 months we're going to have a trend of this incredible demand side.
No, that makes sense. I mean, one thing, and we've talked about it because obviously tradition, one thing that we're heavily involved in is land development and residential neighborhood construction. And, coming out of the last recession 10, 12 years ago, housing starts plummeted. And we were way below kind of the 50-year trend line of starts. And when you're so far below that long-term average, at some point the chickens are going to come home to roost, right? You're going to get, everything goes back to the mean, right? I mean, so, COVID and what happened just, it kind of forced the issue more, so it came faster. But again, we were seeing those starts increase even before the pandemic, so it just sped that up. And again, when you're below the average for so long, it's eventually going to, snap back, and we're looking at it right now because, population growth and everything else. It's like, sooner or later, we were obviously being in the residential world, we were hoping for this, but it's just to have it happen so quickly and so extreme, it just creates a whole nother set of challenges. Obviously, it's great to have that demand in that business, but boy, to have it come so fast and so furious and have demand outstrip supply for all the materials and labor, it's just it's crazy, right? We talk about it all the time. It's like, I can't believe this is happening to this extreme, but it is.
Yeah.
So Dean, you understand the situation. We understand the challenges, the problems, whatever you want to call them. So going forward here, what's the best scenario when you're dealing with clients? What would you tell them? What would you tell clients that are coming in? And the good thing is that clients seem to be a lot more educated these days on going on in the market, what's going on in the industry. So that's a plus, obviously, for you guys. But to any new client that walks in your door and says, "Hey, Dean, I want to build a house," what are some of the first few things that you're going to talk to them about?
Well, that's a good question. I have the good fortune of being in custom homes. So when I have a customer sitting in front of me, we're discussing their thoughts, their ideas, their vision, their budget. Mm-hmm. And those parameters allow me to lead them into and guide them into the size of the house, complexity of the home, and the features. And I can use the homes that we built recently and historical numbers to kind of help guide them in that conversation. So those are the key ones. I'm having a conversation today with a customer specifically on budget, amenities and finishes and specifications, and I can really, at this point, based on current pricing, guide them into that design and a parameter that they understand. And I think that open, honest transparency is something that they appreciate in our process.
One thing, again, I'd mentioned I wanted to talk about is the financing side of it, and that's kind of, what we can maybe wrap up with here today. Interest rates, they plummeted kind of going into the pandemic as the economy shut down, with that reduction in overall economic activity. That's, brought rates down, and they've stayed at a very low level for the last 12 months. And now with the economy reopening, you're seeing those rates go back up again. The Federal Reserve's charged with trying to facilitate economic activity, and one of the ways they're doing that is trying to artificially keep rates low, and they're purchasing mortgage-backed securities or doing some artificial things to kind of subsidize the market for a while, because they're talking about, that as we reopen here, it's kind of an initial surge. But as you see with cost inputs for building going way up, so is everything else, not necessarily with new construction, but just out there in the economy. And as that inflation goes up, interest rates will come with it. So I guess the time is ticking here, right? I mean, so the rates are moving up. So I think for new construction homes, it does put people in a situation where there's urgency there, because that is one way to mitigate cost increases, to have a very low interest rate. So with that, I think that helps, kind of push people into making decisions quicker. But, with that financing too, there's also challenges with these labor inputs. If people are concerned about locking in an interest rate, but you can't get the materials to start to build, and now it's pushing over a longer time frame, or to get their certificate of occupancy because they don't have appliances in or other things. So this is where, again, a collaboration with the lender and the builder to really understand what are the true time frames and costs so we can put the right financing product in place. And I'm not sure, my question to you is, do you have those kind of conversations with the clients up front, just so they understand how that building time frame and costs can impact their financing options?
Yes, we do. And I have the good fortune to work with Tradition Mortgage, the best mortgage company in the industry.
All right, that's the answer I'm looking at.
So yeah, we're having those. I have about a third of my customers are cash buyers. So we set up an escrow account to pull from, and they're a little bit more shielded from the market fluctuations than your typical builder finance buyers with that kind of lead time and that kind of unknown in the future. So when it comes to the mortgage side, we're talking about it. It definitely pushes a customer today to move forward because they don't know, and they do see interest rates, inevitably have to go up a little bit, and how that climbs in the future, where that ends. Customers have a interest rate today that's extremely enticing, and so it moves them forward, and that's been helpful for us. But the conversation about how we finance things, how we get to the end of the project, and what's remaining, hopefully we're mitigating that in advance, having those discussions and ordering this product so we don't end up with that scenario. We do have longer lead times, and our construction cycle is longer as well, so that allows us a little bit more flexibility to get that product ordered.
Got it. The one thing that we run into, and it's with existing homes and new homes, it's just with the demand and the prices going up so far, and so fast, comparables and getting the appraisal to match up with the purchase price. Existing homes where people are going in. I know we had Jake Smith from Sotheby's talking a couple weeks ago about how people are kind of prepaying a anticipated year's worth of appreciation to try to get a house, but when you're appraising it, you're looking at rear view mirror historical data, so that stuff's not catching up. So all of a sudden now you have an appraisal that might be 10, 15, some extreme circumstances, 20% lower than the purchase price, and generally speaking, people are going to have to come in with that additional cash to cover that shortfall. And it's with new construction, it's the same thing. A lot of times, when people are building a big custom house, it might be a tear down where that lot doesn't even show up on MLS. That price of that construction doesn't necessarily get picked up as a comp until it would be maybe resold in the future. So even in the best of times, sometimes on a real large custom deal, you run into that appraisal issue where you're just not having the depth of comps. And now with material costs going significantly higher, that potential where someone's looking at, gosh, why is this appraisal so much lower than my cost? And it's because of just how an appraisal looks in the rearview mirror. It's not meaning that, hey, Homes by Tradition or any other builder is building you something that isn't worth what you're paying for it. It's just that the methodology of an appraisal doesn't allow for that forward-looking value piece.
Good point. That's a very, very good point. So I've asked that I have a conversation with all the appraisers. So the respective lender that they're working with, I would like to get in touch with, talk to that appraiser and explain kind of what the conditions are, what the quality factor is for our homes. And I've been very fortunate to have that access. And so it has helped, and it's, I think, a very, very important and needed conversation. And they're very appreciative, too, to understand what our market conditions are, what the supply chain side, what the impacts are, so they can assess it and put proper appraisals based on current market conditions.
Yeah, and having that collaboration between the lender and the builder, and really being able to talk to the appraiser and make sure they understand exactly what you're building. All those pieces fit together to create a great client experience, and I think that's, Dean, you do a great job of educating your client up front, because it just increases the odds of a final conclusion that everybody is happy with. But the takeaway for the listeners is that you really, when you build, especially on the custom side, depending upon your financing needs, how much leverage you're gonna need to finance that house, you really have to understand the overall project, and it needs to be a very collaborative project with all parties involved.
Right.
Well, good stuff, gentlemen. Once again, Dean, appreciate your time. I know you're busy and you have plenty of clients to educate. And Erik, again, thanks for joining us here today.
All right, thanks, Mike.